What's happening, crypto crew? It's your boy Whiteboard Invest here, ready to drop some fresh crypto knowledge on you. We've got a jam-packed episode today, so grab your favorite beverage and let's dive in. On today's agenda, we're hitting you with the latest and greatest from the cryptoverse, including BTC price. Update, what's Bitcoin up to today? Gary Gensler softening his stance on crypto. Donald Trump's crypto holdings triple in a week thanks to meme coins. Vitalik Buterin not a fan of celebrity meme coins. DMM Bitcoin exchange plans to rotate funds to repay hack victims. VanEck's predicts ETH to hit $22,000 by 2030. Let's not waste another minute. Let's dive into today's hottest crypto news. Hello there, folks. Today, Bitcoin is trading at around $7,900, which is a bit of a drop from yesterday's price of about $71,200. So, there's been a slight decrease of around 0.45%. The drop in Bitcoin's price can be attributed to several factors. Market sentiment can shift quickly, and news related to cryptocurrency regulations or macroeconomic trends often play a significant role. For instance, if there are concerns about regulatory crackdowns or negative economic news, investors might sell off their holdings, leading to a price dip. Looking ahead, Bitcoin's price is expected to continue being volatile. It's crucial to stay informed about market trends and news that might impact its value. Analysts often advise keeping an eye on both global economic indicators and specific developments within the cryptocurrency space. Just remember, this isn't financial advice, just me sharing some observations and having a bit of fun with the numbers. What do you think? Are you seeing any interesting patterns in the charts? Let's stay informed and continue monitoring Bitcoin's price action in the days ahead. Before diving into the next story, ensure you catch every moment till the very end of the video. Trust me, the juiciest updates await you. In Gary Gensler's latest interview on CNBC, the SEC chairman came across much more open about the crypto market than ever before. Could this be a good sign? Gary Gensler, the head of the U.S. Securities and Exchange Commission, SEC, shared his thoughts again on the crypto industry on CNBC. This time, his tone was noticeably softer when asked about issues like ETFs, altcoins, and crypto exchanges. During his chat on Squawk Box on the morning of June 5, 2024, Gensler emphasized that crypto exchanges disclosing their product risks isn't enough to shield them from SEC enforcement. He mentioned that even if these exchanges warn investors about risks, they could still face lawsuits from the SEC if they're caught manipulating the market or spreading misleading information. Gensler pointed out that many crypto companies still haven't met the necessary disclosure requirements. These crypto exchanges are operating in ways that traditional financial markets wouldn't dream of getting away with. The SEC has been busy, suing big exchanges like Kraken and Binance, and they're still in a civil lawsuit against Coinbase, the largest CEX in the U.S. by daily trading volume. These actions aim to prevent another disaster like FTX. When asked about how he views tokens in the crypto market, Gensler sidestepped a bit, moving from saying all tokens are securities to tokens lack necessary information. This implies the SEC might not try to regulate the entire crypto market, but will focus on tokens that seem fraudulent or don't provide enough information to investors. Even though Gensler's tone wasn't exactly cheerful, he hinted that tokens like Solana or the meme coin Bonk could be considered acceptable investments if they disclose enough information. This is quite a shift from his usual stance on CNBC, where he often dismissed the crypto market as a field full of scams that investors should avoid. Interestingly, Gensler's attitude has changed just a few weeks after the SEC surprisingly approved Ethereum ETFs. For months, it looked unlikely, since the SEC viewed Ethereum as an unregistered security. Many believe Gensler and the SEC's moves are influenced by political shifts in Washington. The 2024 elections are around the corner, and the crypto industry has poured about $160 million into congressional races, making lawmakers realize the significant voter interest in the crypto market. Regarding investment funds, Some financial analysts predict that the approval of spot Ethereum ETFs could open the door for other altcoin ETFs, like those for Solana and XRP. So, is this a turning point for the crypto market with the SEC and Gary Gensler beginning to ease up on regulations? It sure seems like a possibility. According to Arkham, former U.S. President Donald Trump's crypto wallet now holds over $30 million in assets. This huge growth spurt mainly comes from the memecoin TROG, which airdropped half its total supply, worth over $20 million, into his wallet. On-chain data from Arkham shows that the value of Trump's wallet has soared past $30 million, tripling since the last update on May 28th. His wallet is packed mostly with memecoins, including 210.34 billion TROG tokens, valued at $18.4 million, 579.29 thousand Trump tokens, worth $756 million, 1 million MAGA MVP tokens, about 437,000, and some Ethereum worth $322 million. The TROG airdrop was a game-changer, dropping 210.34 billion tokens into his wallet, which was initially worth around $5 million at launch. Since then, TROG has skyrocketed over 400%, bumping the free TROG stash's value to more than $21.4 million. However, TROG only has about $1.1 million in liquidity, so even if Trump knew about these tokens and wanted to cash out, he wouldn't be able to sell more than half of his TROG without running into liquidity issues. Meanwhile, the MAGA Trump token hasn't seen much action, hovering around 13.1, down 1.2% in the last 24 hours. Earlier this year, MAGA spiked by a whopping 1,500%, driven by the meme coin craze led by Dogecoin, Pepe, and others. It's not just MAGA. Other political-themed meme coins also surged following Trump's pro-crypto comments recently. Everything kicked off when Trump criticized President Biden for not understanding crypto and started accepting crypto donations. He even promised to pardon Ross Ulbricht, the founder of the Silk Road black market, if re-elected. However, Trump's subsequent criminal charges caused wild price swings for these meme coins on May 31st. Arkham's data reveals that Trump is currently the celebrity holding the most crypto, with a total value of $33 million at the time of reporting. If you enjoyed this video, don't forget to leave a like and subscribe. Your support means the world to me and keeps me motivated to bring you the hottest news updates every day. Ethereum founder Vitalik Buterin isn't too pleased with the current trend of celebrities issuing their own tokens. Lately, we've seen a wave of celebrities and key opinion leaders, KOLs, from different fields jumping on the bandwagon to create their own tokens. They're taking advantage of platforms like Pump.fun, which makes it super easy to create a token, and then promoting these tokens to their massive social media followings. The hype and FOMO from their fans have driven these token prices up, bringing in a lot of quick cash for the KOLs. But the downside? Many naive users end up becoming the liquidity for these tokens, not seeing any real profits. Of course, this trend has been heavily criticized by the community, and now Vitalik Buterin has stepped in to voice his concerns. In a recent statement, Buterin said, "I'm quite unhappy with the celebrity token trend this cycle. Financialization should be a means to an end." He respects financialization when it serves a worthy purpose like healthcare, open-source software, or art. But with the current trend, financialization is the end product, which he finds problematic. Buterin pointed to Ashton Kutcher and Mila Kunis's Stoner Cats NFT project as an example of a more valuable celebrity crypto endeavor. Despite facing legal issues with the SEC over unregistered securities, Stoner Cats still produced a tangible product, a cartoon show featuring their NFTs. This, Buterin argues, has more value than all the celebrity meme coins popping up in 2024. Interestingly, Buterin has been a strong supporter of this project. He's also expressed that meme coins can have more utility than people think, subtly supporting their development. However, he also warns that the meme coin space is fertile ground for those looking to exploit it for personal gain rather than building communities. As reported by Coin68, Nearly 500,000 tokens were issued on Solana in May, mostly meme coins. Unfortunately, most of these led to losses for investors, with few projects truly standing out. Buterin's criticism of celebrity-issued meme coins makes sense. He also laid out some criteria for evaluating celebrity tokens. First, they should have a good goal that benefits the community, not just enrich celebrities and early buyers. Second, they should offer something more interesting than just being a tradable token. For instance, Buterin is not a fan of tokens used merely for voting in DAOs. Instead, tokens should have utility for everyone and related organizations. Lastly, these projects should aim for longevity, lasting at least 10 years, rather than fizzling out in a few months. In summary, Vitalik Buterin's take on the celebrity token trend is clear. It's more often about quick profits for the famous rather than creating lasting value or supporting meaningful causes. He urges for more substantial, community-oriented projects that can stand the test of time. DMM Bitcoin, the Japanese crypto exchange that got hit by a $305 million hack last week, has just rolled out a plan to make things right for the victims. Last week, hackers made off with 48.2 billion yen worth of Bitcoin, which is around $305 million. True to their promise to cover all the losses, DMM Bitcoin quickly came up with a strategy to raise the money needed to pay everyone back. Here's the latest update. As of June 3rd, DMM managed to borrow 5 billion yen. Next, they plan to raise another 48 billion yen by issuing more shares on June 7th. And to top it off, they'll secure an extra 2 billion yen through priority loans by June 10th. Altogether, that's a whopping 352.4 million USD, which they'll use to buy Bitcoin and repay their customers. For a bit of background, DMM Bitcoin is a subsidiary of Financial, part of the DMM Group, a multifaceted conglomerate established back in 1999. In 2023, DMM Group raked in 347.6 billion yen, or about 2.2 billion USD in revenue. As for the hack, the cause is still a mystery. The exchange is investigating and promises to keep everyone updated as they learn more. According to Elliptic, this hack ranks as the 8th largest crypto theft of all time and the biggest since the $477 million FTX hack in November 2022. So, while DMM Bitcoin is dealing with one of the largest hacks in crypto history, they're taking significant steps to ensure their customers are made whole, showing their commitment to integrity and trust. In their latest report, VanEck's predicts that Ether will hit $22,000 by 2030, and they've got a plan to optimize investment portfolios based on this forecast. VanEck, an investment management firm that's already applied for an Ethereum ETF, is showing serious confidence in ETH's future. They're betting on Ethereum ETFs getting the green light soon, just like Bitcoin ETFs did back in January 2024. In fact, the SEC approved Ethereum spot ETFs on May 24, 2024. Investors trading these ETFs can reap the benefits if crypto prices soar without having to buy the tokens directly. Plus, ETF sponsors earn fees as more assets flow into their funds. VanEck's analysts predict that these ETFs will attract $3.11 to $4.8 billion in the first 5 months of trading. VanEck highlights Ethereum's breakthroughs in finance, banking, payments, marketing, social media, gaming, infrastructure, and AI as major growth drivers. They see Ethereum's tech lowering costs, boosting efficiency, and increasing transparency, potentially shifting a big chunk of market share from traditional financial and tech institutions to blockchain solutions. They estimate Ethereum's total addressable market, TAM, could reach $15 trillion. The firm also notes that Ethereum's free cash flow from revenue could hit $66 billion by 2030, backing their $22,000 price target. They argue that if Ethereum continues to lead among smart contract platforms, hitting that price is plausible. VanEck even calls ETH a revolutionary asset, dubbing it digital oil, due to its crucial role in network activities. Ethereum has surged more than 63% this year, with its current price around $3,864. So VanEck's optimistic outlook on Ethereum seems well-founded, with strong potential for growth in the coming years.
Alright, that's hottest news today. If you guys did find this video helpful, leave a like and subscribe our channel for more free content. Thanks for watching. Peace out.